So it's great to have you. I was so excited to meet your team out in Los Angeles during the crowdfunding week, right? And my team and your team got along great. And so, I thought it would be great to come together. When I heard the idea of ModVans, all I thought about is the world we live in today, the economy, the markets, and how much things are changing. And so, today's guest, everybody, you can read bios and stuff, but PJ, Tezza is the CEO, co-founder of ModVans, and this is an exciting entrepreneurial company, right? They're building from ground up, but they're not a company that's just beginning. They're a company with revenues, with sales. They're very successful, right, at what they do. And I just think they have one of the hottest arenas of business in the world, like where the world is changing, right? The modernization of travel, the modernization of, American living, I think changed during the pandemic greatly. I think more people had to go to national parks. More people had to go and travel in different ways, and people found different living situations. But, PJ, tell people just real quick, what you do, who you are, just because I think that helps them understand the conversation we're about to have for helping people understand, what is business and how do you make money and how's money work and all of that cool stuff.
Okay. Yeah, sure. So I am the CEO of ModVans. ModVans has been around for 5 years. So for the last 5 years, I've been super deeply involved in ModVans. Prior to that, I have a pretty long career. I'm 53 years old. And I started work at basically 16 typing for a software company. So I've been involved in software and early stage startups since, in all those years. Whenever the companies get about 200, that's time for me to move on. 200 people. So I've kind of been in a lot of different startups, but all software based before I got to ModVans. So all, no hardware. I never, except for maybe hobby stuff, I never worked on hardware before. So this is my first hardware startup, and it's been pretty exciting to do that. And then, one of the fun things about ModVans is that I've actually got to bring in the software component, because now we have these high tech components where we're actually programming all the devices inside the vehicles that we build. So to go back a little bit, Lori and I, we have 3 kids, and we always wanted to take our kids on adventures, hiking, rock climbing, biking, all the things that have gotten to be super popular during this pandemic, just like you were talking about. And we tried a couple different ways of traveling with our family, and we had an RV, a traditional RV, it was a Class C, 26 foot long. And we had a great trip with it, but when we got it home, it just did not fit our lifestyle. It was too big. I had to pay to park it. It was noisy. It was really hard to drive. So I ended up driving it all. So I kind of was like, hey, what can I have that would eliminate the problems, but have the good parts of the RV? And I, searched. I couldn't find the vehicle that I thought was going to work for us. And I looked at my friends in the climbing community, and they were converting vans. So I ended up converting a van in my driveway. So that's how kind of the genesis of ModVans. But when I did it, I was like, oh man, that was way too much work. I'm never doing that again. But after 2 years of people begging me, like everywhere I went, when I go to campground, go to the beach, people would be like, hey, where'd you get your van? Can I see inside? After 2 years of that, I finally broke down and built a website, lean startup style, and just took pictures of my van, put a lot of information online. And that was the genesis of ModVans, was just, lean startup. I built a website to see what interest I could get. I got so many people saying, oh man, I would totally buy this. When's it going to be available? So I decided to take it kind of the next step further and see if I could get some deposits. I ended up getting more deposits, and I had to turn off all the phone and email after a while, because I just got so many orders. So it turns out there's just this huge demand for this type of product. And so I researched it really carefully, and what I decided to do was to become an RV manufacturer. So we buy chassis, that's what we call them, from OEMs, which would be like Ford. Right now we mostly build on the Ford Transit, but it could be Mercedes or Dodge. There's different chassis manufacturers. In the future, it'll be EV chassis manufacturers. So we buy those, and then we do a lot of work to them, including making a lot of custom parts and stuff, and we convert them into these camper vans, which for us, we call them multi-purpose vehicles with camping features, because they're kind of more on the SUV side than the full-on Class B RV side, because that was what I wanted for my family. I wanted something that we could kind of drive around every day, that was a little nimbler, didn't use so much gas. And it just turns out that was kind of that was maybe a stroke of genius to understand that, gas prices were going to go up, that inflation was coming, and that was going to push people away from wanting to have these giant RVs.
Well, what's fascinating to me, right, is it's kind of like there's a couple parts to this. One is I'm the worst camper, like in the history of mankind. like Like,
Yeah,
it's not that I can't fish, I can fish, right? It's not that I can't start a fire, I can start a fire, right? But do I want to? No. Like, you know, can I go into a tent?
my dad.
Right? Can I set up a tent? Yeah, I've done all of those things, right? But at the same time, like, I'll give you this is going to make you laugh your ass off. But like, one of the last 2 times, so there's a place in California called Pudding Stone that my father-in-law loves to go to. It's like a lake, right? And they have campsites and campgrounds, right? And after the first trip, after a night of sleeping on air mattresses and running out of air and mosquitoes and other things, right? And it's about it was about 45 minutes from where I used to live in California. A couple months later, we went back there, and I told my wife, I said, look, I'll go camping with you guys, but I'm gonna drive home every night and sleep in my bed, and then I will come back, right?
I'll come back and hang out at the lake.
And I'll come back and hang out. But like, I am all about glamping, and I think this is one of those amazing tools. But the RV communities have been intense, like with the farms we own and things. I can't tell you how many RV groups have contacted us and been like, hey, can we take 5 acres, or can we take 20 acres and turn it into an RV site? Because we own these beautiful, we own a lot of, one of the investments we have is farmland. So we own these beautiful farms and I don't know, not even intentional, but like, I think all 4 of our primary farm locations have rivers that run right through the middle of them, right? And I think it's for one of the things we try to identify is upside potential. I think maybe the river has a lot to do with the upside with irrigation and some different things. But anyways, so for me, glamping's all it's where our world is, right? And I think we have one of the most beautiful countries on the planet, and it's so unexplored by the average everyday American, that it gives you a way to be able to do it in comfort and not have to go and be extravagant. What's an average mod van cost?
So that the average price in 2021, which we need to redo now that it's 2023 here, was $109,000.
Yeah.
And so what we do to make that affordable, though, which is kind of interesting piece of the puzzle, and one of the reasons I became an RV manufacturer, is that we can get you a 20-year loan on that. So you kind of buy it like a house. You get these long-term loans with relatively low interest rates, and then the monthly payment becomes very similar to what you would pay for a new SUV. And it turns out there's 8 million of those sold every year in the US. So there's a lot of people that can
500, 600 a month, 400 a month. Yeah.
Everybody
1,000 a month.
That's what a new SUV cost you maybe 3 years ago. Now a new SUV costs you $600 or $700 a month.
Okay. Yeah. So, I mean, I think that's great, to be able to have, I mean, how much does a vacation property own, right? Or a beach house, or, a house in the mountains and those kind of things. And I think, there's Americans with money, right? And then there's everyday Americans, right? And it's, what do you put your money into? What do you invest in? What's the margin gap for a mod van? And what do you guys make on a $110,000 purchase?
So we have kind of what we have in our financial model, which is a 30% margin, which is amazing for a manufacturer. I mean, that, if you're trying to sell software, then it's terrible. A great software margin would be 80 or 90%. But for a vehicle manufacturer like Tesla is operating 20-30% margins, and everybody thinks they're amazing. It's the most amazing margins ever seen in the automotive industry. So that's our goal. We're not there yet. We have to achieve scale. There's different areas that we need to improve. We need to do a better job of separating R&D costs from manufacturing costs. So, but yeah, if you actually look at the model, and when I track against the model, we're doing really well. I think that 30% is very achievable in the next couple of years for us.
So what do you feel like you've run the last 2 years as far as profit margin on an individual deal? I'm not talking about total business profit margin, because we'll talk about burn rate and other things.
Yeah. I would say we're basically breaking even. That's where we are.
Okay.
We operate pretty much on break even, and then the money that I have taken from investors, which is about $3 million to date, we've invested primarily in expanding our production capacity and R&D. So we haven't lost any money on a per vehicle basis, but I wouldn't say we're really making money on a per vehicle basis yet either.
So this is one of those interesting conversations, right? And I can even see you when you're discussing it, right? I can see your body language and those kind of things, because it's all about investors asking us questions, right? And it's nonstop. So I've done 30% returns for my investors 3 consecutive years, right? And our stock price has gone from $10 a share to $22.22 a share over 12 quarters, right? But I'll tell you, I'll get investors all day long, and they'll be like, well, when I look at your P&L and I look at your profit and loss, right? And they're like, well, you're running a negative P&L. And I say, well, we're an equity-based REIT, right? Our model is that we increase our equity in our assets. So we've gone from, 5 million in assets to 120 million in assets, right? During the last couple of years, and over, 60 million in equity, right? And at the same time, I'm not trying, the $200,000 a month cash flow that goes into my payroll or mortgages or whatever, is I'm not as worried about that 2.4 million as much as the 50 million in equity that we've gained, right, during the last couple of years. But that's a difficult thing, because when you're talking about how do businesses actually work, how do startups actually work? So in your model, there's a number, there's a magic number, right? There's a certain scale you hit when the 30% profit margin kicks in, right?
Correct.
And so talk to me about that, and what does that number look like for you?
So there's kind of two things that have to happen. And I'm just going to give you one example that I know you'll be able to relate to, because you're managing these properties and stuff. So, we don't have any dedicated team for customer support right now. And we've delivered about 130 vehicles at the end of 2022, it'll be about 140 vehicles. So we have a lot of customers out there driving it. And even if they're not having any problems, they might call because they have questions about, how do I upgrade this? How do I do that? Right. And so, the question then becomes is like, how many, what is my, how many vehicles do I have to be building in order to afford to hire a full-time, support rep? And, the answer is it's more than I'm building right now. I'm not at that level yet where, that I could afford to hire that person. And that's kind of different thing. So for another good example is, so we didn't have any dedicated inventory employee. We kind of all shared that. We had a production manager who was dealing with inventory, and our inventory is complicated. We have thousands of parts, and we make a lot of stuff in-house, and we have lots of vendors. It's a big, complicated, hairy problem. And then, as you know, the supply chain got all snarled up, and that meant that we're calling people every week to check on the status of our POs. And so, I did, this year, 2022 was the year that it really made sense to actually not just hire one person, but now a team of 3 people that are doing almost nothing but inventory. So I have to be able to build enough to overcome, that. Where is that number? It's a little bit bigger than where we are right now. So if I say we're building 5 to 10 vehicles a month, I would say that crossover points probably for us would be about 20 vehicles a month.
So when you're in about 250 vehicles a year, you feel pretty comfortable. You'd hit that 30% kind of margin gap, right?
Maybe not the full 30. Maybe it'd be like a 20. We'd be starting to really feel comfortable though, where we could, for example, fund R&D totally out of revenue and not have to take money from, have it be an option whether we want to do it out of revenue. We're really close now. I mean, 2022, I took almost no money from investors. I think I had one $100,000 investment. So that was a total of, investor money in 2022. And we operated the business, and we completed a lot of big R&D projects. I have 5 full-time engineers just working for me all the time. So, I mean, we could go back and figure out what that cost is, but I was able actually to fund quite a bit of R&D. But I'm going to, in the end of 2022, you'll see I still lost money, right? I'm still going to be slightly, I've lost the $100,000 that I brought in from the investor.
Yeah, I don't really consider that like lost, right? And so here's the thing that us
it was an investment, right?
Yeah. Well, it's the thing us real estate guys understand, right? As we understand capital output, right, for capital improvements, right? We understand capital output for capital growth, right? Let's say, I bought a farm in Tennessee for $3.2 million earlier this year, right? And I know that it'll appraise right now for almost $9 million, right? Wow. Now that's insane. But that appraisal didn't come because I went and, pinched my pennies and I didn't put money into the property, right? I put hundreds of thousands of dollars into irrigation, into machinery, into technology, into different things to create that value for investors, right? And so what investors have to look at, right, when it comes to a business like yours, like you're in the toughest place to actually, and sometimes toughest place to raise capital, but that's the conundrum or the idiocracy of what traditional thinking of investors are, right? Because the easy place is when you haven't begun yet. The easiest place is when it's just an idea, right? When it's just an idea and like people are excited about it, right? Like this is the coolest shit ever, right? Like this is this is
Yeah.
amazing. Like, and you know, you haven't dealt with customer service
Revenue
issues
is
yet.
limitless.
You haven't dealt with supply chain issues yet, right? And you know, you haven't had to go through the survival years, right? And it's fascinating because the original company is such a worse investment than the company that already exists, right? And already has revenue and already has products. But the burn rate and the margin gap is something that is very difficult for people to understand. And so what a burn rate is everybody is, it's kind of like if I'm running PJ's business, and I'm not PJ, and you can tell me a little bit more about your burn rate, right? But if I'm running PJ's business, I have to calculate, like, it's going to cost me, you know, $800,000, right, this year, for me to be able to achieve an $80 million profit, right, 3 years from now. And so how can I close that gap between 0 and 800,000 and then continue to push to be an $80 million profits in year 10 or year 12, right? And so this is the fascinating part of a CEO. And that's why also when you look at kind of one of the magic of ModVans is they have an experienced tech, right, entrepreneur. And so you get into this place where you're having to figure out, these are things that other people can't figure out. Have you ever seen the movie, not the movie, the TV show Super Pumped at all, PJ? No, I think for an average everyday investor, there's a TV show called Super Pumped. It's about Uber. So when Uber started and how they had to manage numbers and those kind of things, right? And I know
the story of it.
Yeah, I don't ever recommend that toxic culture, but there's a lot of direct as an investor. There's some things to be aware of, some things you can learn by kind of paying attention to that show and those kind of things. So, you know, for ModVans to only have lost $100,000 in P&L when they're growing the way they're growing and expanding is actually absolutely phenomenal. And I think people have to understand that where they are at is the toughest place to do what they're accomplishing. But as an investor, it should be the most exciting place to you, because they're on, like, when you say like bell curves, they're on the bottom part, not the slow rise anymore, but they're on the bottom part of you know, the acceleration of their bell curve. They might be, you know, 12 months, 24 months from hyper crazy insane growth, right, as an investor. And so that's definitely for our investors ways to look at it, right? I mean, how do you communicate with your investors? How do you talk to them about these kind of issues? Or is it hard to educate them because you're asking them to invest? I always find that difficult, right? Because people think you're being selfish when you educate your investors because you're wanting them to invest at the same time. But I think an educated investor is the smartest thing.
So one of the things that I did, I think is a little bit unique because I've studied, especially equity crowdfunding, because we met at Equity Crowdfunding Week. I studied equity crowdfunding a lot. I've read a lot of campaign pages. And one of the things that I found a little bit, you know, just kind of interesting and that I did differently is I do try to educate my investors, not only, you know, with blog posts and podcasts, but actually right on my campaign page. If you scroll down, you know, to the bottom of my WeFunder campaign page, you'll see there's actually a section that's titled ROI for Investors. And actually what it does is it walks them through, you know, how a person investing $250 right now could hope to, you know, see a return on that investment. And you know, because a lot of people don't understand investing in startups. So, and this is kind of coming back to your thing of, you know, why are you have net losses now versus, you know, growth and all that kind of stuff. It's because we're an early stage company. Both of us are early stage companies. And it's actually what you're supposed to do. You're supposed to lose money early on if you have a sophisticated investor who's done this before. And so I'm trying to explain that on my crowdfunding page, like, okay, you know, here's where we are in our thing. And here's how we're, you know, just like you do with your stock price. I have a similar type of chart on my WeFunder campaign where I'm trying to explain to customers or to the investors, like, okay, you know, here's where we were 3 years ago. Here's where we are today. Here's where we're planning to be next year in terms of, you know, that equity. And here's the exit opportunities, because a lot of the people don't understand how the exit opportunity happens. And then also the timeline. So one of the reasons I'm educating people is because I don't want them to invest. I don't want them to invest their money, whether it's 250 or 250,000, and expect to be able to get that money, you know, 6 months from now, or even 12 months from now, and, you know, have some big payoff right away. This is not gambling. You know, it's an investment in a business that is growing, and it takes, you know, time, effort, and energy to grow it. And with a private company, you do have to wait, because there's not a public market for the stocks yet. And I want my investors, before they make that investment, to understand that, so that, when they do invest, and I'll just give you an example. I had a gentleman, an engineer from NASA, make a pretty large investment, $700,000 in ModVans a couple of summers ago. And we had a big, long conversation because I wanted to make sure that he understood that, hey, you're going to, invest the $700,000 in ModVans, and you're not going to get it back next week. And it's not going to probably coming back next year. This has to be something that you're going to be patient with. And you have to understand that there's still big risks involved. You could lose all of it, and if it's your family's generational wealth, we should have a big discussion about that. And so we had that big discussion, and I felt really comfortable that he knew exactly what he was getting into, and he was still willing to make the investment. That's the kind of investor that I want. And yeah, I don't think he really needed to be educated, but I was screening him to make sure that he had the knowledge that he needed to make that investment, so we could both feel good about it. And that's how I want to be for every investor. So for a $250 investor, I can't, it doesn't make sense for me to have a big, long conversation. And for most people, that's probably not a big enough investment for it to make sense for them either. So for them, I hope that they can get that information from my campaign page, where they can read about it, or, maybe in the future we'll do more podcasting, we'll do more videos, because I've learned that not everybody absorbs information the same way either. Not everybody's going to go to the bottom third of my campaign page and read, 5 paragraphs of text about how they're going to get paid back.
Well, PJ, it's interesting, right? Because the model I ran for our business, I was so unfamiliar with the crowdfunding industry, right? I was so unfamiliar with the way things are supposed to be done. So when we started ours, we did the non-traded public REIT, right? And so with us being public, we actually buy our stock back from our investors. But it was interesting because the model we went with was just a model I originally created with our first private equity Reg D in 2015. And then I knew that I wanted to attract more investors. I wanted to be able to publicly advertise to bring investors in those kind of things, right? But I spent, a decade of my life consulting companies before we opened our own private equity, real estate fund and those kind of things. And so it's interesting how there's so many different models out there, right? And so when you look at a company, it's like, do they have a model that can achieve success? I was talking with a group just yesterday, and no, they won't be on one of our podcasts, right? Because as I looked at them and they were talking about their excited idea, and they had raised, I want to say $4.5 million, right, for their business. Mm-hmm. And I was looking at their idea, I couldn't see the profit model. Right. I literally, I'm looking at it. I'm like, where's the gap? Where's the profit center? Where's the income? Right. And where's your distribution? Right. To be able to sell your product. But then there's not a model once you sell your product for producing income. And it was an exciting idea and an exciting industry. And I'm not going to throw them under the bus because, I hope they go and be successful, but I won't be able to share them
you never know, right?
On our platform. Right. But it's not something I'm going to invest in. Right. And because I'm constantly making investments and looking for investments myself as I diversified. I think one of the cool parts about our industry, though, is you get a chance as a normal person to be an angel investor. You get a chance as a normal investor to be almost a type of venture capitalist and win in an industry when guys like the way I grew up doing paper outs, and just like the way I grew up, we didn't grow up thinking we were going to get a piece of companies, a piece of businesses to be able to get the big wins. Like I think the guy invested in Uber, like it was like $10 million and it ended up being in the billions. Right. But
every investor of Amazon, it's interesting, his little thing. He had like 30 angel investors in the beginning, and they all invested relatively modest amounts, but they're all billionaires, right?
Yeah.
All those investments became worth, not every company's going to be in Amazon. But I always think it's interesting because I looked at the list and I was like, oh man, they invested like $100,000, in the online bookstore version of Amazon too, by the way, not that we're going to take over the world version of Amazon. So that, that's like, it's like 20 or 30 people, but then they went back to the list and they're all billionaires. And you're like, oh, wow.
Yeah. And any angel investor in the world will tell you that variety and picking your winners is important. Right. But out of the 10 companies you think that are going to be winners, right? It's the one you thought was most likely going to be a winner is probably not. The one you thought least likely was going to succeed is probably going to finish in the middle somewhere. And it's one of those 8 in the middle that actually ends up being the home run, right? And for us, we're a little bit different in the sense like there's not the kind of there's never going to be 1,000% return for our investors, right? It's going to be a moderate year after year investment return, because it's our stuff's in real estate, right?
Yeah.
There's not a cap, in ModVans, right? In ModVans, it's as
the old
big as the industry
thing,
is.
right?
Say again?
Lower risk because you have assets that you're actually purchasing, right?
Yeah.
But then the reward's not quite as,
Yeah,
theoretical.
it's all buckets. Like Richest Man in Babylon. Have you ever read it?
Mm-mm.
You gotta read it. It's one of my favorite books.
Yeah. Send me the link.
And it's super short. It's like literally it's like a parable book, like quick, right? And one of the things they talk about in that book is just your money being in buckets, right? And being in different buckets. And you got to go with your high risk bucket with extremely high upside, right? You have to have that bucket playing all of the time, right? And now within that bucket, you should be smart and make good investments. And then you have your other bucket, which is, I don't know what you call, bonds or different things, where you're getting your 1%, 4%.
Government guaranteed bonds. That's what my dad likes.
That kind of stuff, right? For me, there's better ways to get guaranteed returns, but yeah, but yeah, then you have that bucket, and then you have your buckets, that are in the middle with more moderate risk and different things. And so as an investor, I think diversification is always important. I think having the different buckets is really important. Now, let's talk about you as an investor. Like, what do you look at? How do you see things, right? You're an entrepreneur, a business owner, but you go and look at investments. How do you look at it?
That's interesting. So I would say prior to crowdfunding, I was not an investor. So my dad is an active investor. At one point in time, he was a day trader, and he got me involved on the computer side. So we built computer models, what we call quaint trading at this time. And I did some of that, and in the end, I found it very unsatisfying. It was not interesting to me. It was just like moving numbers around on a spreadsheet, and there was something missing, and I couldn't put my finger on it at the time, but that kind of just got me. I mean, if you want to talk about options and trading and shorting and pushes and calls and puts and calls, I do actually know all the terminology, and I could invest as a day trader. I don't know that I'd make money at it, but I would at least know what I'm doing more than some people on Robinhood, right? They're like, oh yeah, let me get this margin loan and buy some puts and calls. But anyway, so I understand all that, but I was never attracted to it. But now that I kind of got into it through ModVans, but now that I'm in ModVans, I find myself going out there onto the crowdfunding sites and finding entrepreneurs that I really like and what they're working on, and then making an investment, not necessarily a large investment, because I have most of my wealth is wrapped up. I'm the one bucket guy. I always put the most money in my businesses, so I have about $1 million of my money invested in ModVans. So
I will say this,
not including my equity.
As an investor, that's very bad. Right. But as investing into an entrepreneur, that's what you want, right? You want your entrepreneur who's all in. You want your investor
all the cards in.
Who's putting everything in.
So anyway, but I like, so as I've gotten into this hardware thing, what I've started to realize about hardware in particular is if you can find a team, and it's not really specific to hardware, but the lesson is kind of general. If you can find a team that is working and you can tell how much work and sweat that they have put in to get to a certain stage, and whether or not that stage is actually the awesome stage or not, I feel like that is a team that is likely to be able to pivot as long as they have the time necessary, that they're going to be successful in some way or fashion.
Now, do you feel like with ModVans, it's just fired into my brain. Do you feel like with ModVans that down the road, in the next, let's say, in the next couple of years, that there's the potential with your ability with software, right? And then hardware and what you're doing inside, that you think there'll be some patents, you think there'll be some things that will come out maybe in other vehicles or other industries where you guys are being innovative, because it's not like Ford and Chevy are being innovative at this point, right? So they're
just playing catch up to Tesla. They're trying so hard. It's actually, so I've been really following the electric vehicle industry and just the vehicle industry in general, and it's so crazy to me how they just copy and paste Tesla every chance they get. So my wife has a Mach-E, this Ford's EV, and it's actually, I would say, the best EV that's not Tesla right now. And it's just crazy how much they just copied them. They have the big screen on the dashboard. They have the vents that are minimalist. I mean, like every little detail. It's just like, oh, the roof, the big glass roof. Who did that? I mean, it's like, oh man, like every little thing they just copy them. And
Yeah, my brother
yeah,
just
so
bought the Rivian, I think is
yeah,
how you say it. Yeah,
yeah.
he
I
just
would say
bought that. Yeah.
Rivians, they do have some stuff that Tesla didn't have. They worked really hard on their suspension. I mean, there's some like super technical things, but I would say Rivian is more innovative than what I really see in the Mach-E. I mean, don't make me wrong. The Mach-E is a beautiful car. It's rocket fast. The charging network's lame, but that's a whole different story. But it's a nice car, but it's not innovative. You know, they bought their cells from LG. So anyway, coming back to ModVans, we are very innovative. We have all this technical stuff that we've done that is in an area that's parallel to that, where we're controlling the heater, we're controlling the air conditioning, we're controlling the refrigerator and the plumbing, all with our own circuit boards and computer software. And part of the reason is because I'm a tech guy. I see that stuff and I'm like, oh, that makes sense. But I'll tell you this is, you know, once you start controlling things with circuit boards and software in a central computer, it just makes sense. You're like, oh, why wouldn't I control everything with a computer that I can upgrade with over-the-air software? And it's just a different mindset. Whereas Ford and those guys are like, how can I go from where I am today to, you know, to have 90% of the features that Tesla has with the minimum amount of investment?
I mean,
their mindset is totally different.
I have a Navigator, right? And,
Yeah.
and yeah, you know, my tech in my Navigator, and I have a 2022 Navigator, right? And I got, you know, the best version that I could figure out, right? And it's behind. You know, the TV screens, the TV screens,
they're just working at it from a different angle.
The TV screens for my 6-year-olds, like you got to download something on an iPad and then it's got to project to the TV screens. Why they just didn't make them iPads in the first place. And then my touch screen, I literally have to reach across to do my navigation or to do different things on my touch screen. Like, you know, there's just things that I realize. Now they have the most comfortable seats of any seats I've ever sat in.
They got the auto part
life.
Correct, right? That's how the Mach-E is. It has beautiful seats. They're beautiful. They're so comfortable. The interior is very finished, but I'll give you another example about the Mach-E just because, you know, we have it. So we took it in, we left it for vacation because they need to do Lori's had it for 1.5 years. When we bought it, they were like, we're going to do over-the-air software updates, right? And but it's not quite ready yet. You're going to give you the car and we're going to do it, right? So 1.5 years later, after we took delivery of it, now we were one of the early, you know, we have the launch edition or whatever. 1.5 years later, we take it to the dealership to go on vacation. 3 weeks, we come back and pick it up, and they're like, we didn't do anything. We didn't put the upward date on it. And the reason why is because we had another car in here, another Mach-E, and we put the update on it, and that car hasn't been able to start up since then. We haven't been able to drive it since then. That was a month ago. And we're waiting on Ford to give us a solution. And in the meantime, we're not putting that update. So here we are, like 2 years later, it's still no over-the-air updates. And my point is not that Ford's not trying hard. I totally believe they are, but they just don't know how to do it. And I'm going to give you a contrast is, you know, Tesla had working over-the-air updates pretty much since day one, as far as I know. And ModVans has working over-the-air updates. I have 3 circuit boards with firmware on them. I can update them over the cloud.
So let me ask you this question. Yeah. So if Tesla came and made you a nice lucrative offer, right, tomorrow, right, is that something you would consider? And is that kind of one of your plans, is maybe to sell to one of the big companies?
So the way, so early on in the beginning of ModVans, it was just Lori and I at the time, but we had a very heart-to-heart decision about how we want to run the business. Is this going to be a business that we're going to try to, you know, it's going to be where our kids are going to come work and all that kind of stuff? Or is it going to be an investor-based fast growth business? And we have chosen the investor-based fast growth business. And so if there is an exit opportunity that is good for all of our investors, that, you know, solves the risk problem once and for all, then we would take it. I mean, obviously, you know, as we grow, that point gets kind of, the balancing point is different. So right now, if you were to come to me and, you know, make me a lowball offer, I'm not going to take it because ModVans has satisfied a lot of the risk. We're, you know, like you said, we're on the bottom of that hockey puck, and I'm not going to, you know, trade going up the hockey puck for, you know, some kind of just, oh, well, you know, I'm not tired of ModVans, you know, I'm not ready to give it up yet. But at the same time, I would take an honest look at any offer that was on the table.
For the best of your investors.
Yeah.
I think you have to always consider that, right? For your investors. And, you know, in a REIT, we're a different model. And at the same time, I have, you know, co-owners and I have seed investors, right? that joined us, at the startup phase. And I would always have to take that into consideration. And I think even in our contract with them, we actually wrote a buyout for them if we hit certain, like if we came in, we're offered $100 million, right, to sell our management company for our REIT. Then at that point in time, we would either have to buy them out, right, if we wanted to continue to run and those kind of things, which I'm not, wouldn't be against either, or take the offer, right, or they can stay in and ride the ride. I think when you look at our models, one of the similarities is it's very best, like we're going to make our decisions best for our investors, right? And sometimes that's not best for me. Sometimes that's not best for a piece of real estate for you. Sometimes it's not, but it is the best decision, for the investors. And I think that there's a lot of, you and I have a lot of agreement with that part of it. For you, what is biggest moves this year? Like 2023, right? Hit it with authority, right? Literally, a couple days right before the New Year, I did a Zoom call with 500-600 of our investors, and I just talked about 2023 predictions. What's big for us in 2023? So what is it for ModVans? What are the big moves? What do you need to do to know you get to that 20 to 30% margin by the end of the year?
So in 2020 or 2021 and 2022, the economy was kind of uncertain, and our ability to do things was a little bit uncertain. So what we did as a strategy, as a business strategy, is we kind of doubled down on R&D. So, coming at the end of 2022, we're literally have all these high-tech vehicles that have our new battery system, patent pending, all this new technology, and it's finished. So, we're coming out of 2022, 6 models. We just had 1 model when we launched. And when we started in 2021, we really only had 2 models. And so now here we are 2022 with 6 models, 3 of them being these super high-tech things.
Which is really good, because I'd say the last 2 years, technology went backwards in vehicle manufacturing in the U.S. I really feel, I don't feel like it went ahead. I feel like some of the luxury vehicles, especially, I know that I feel like the tech's gone backwards. So that's a really good thing to do during that period of time.
The reason they're going backwards is because they're trying to catch up with Tesla, and they're pushing in ways that are not comfortable to them, and they're messing up, basically. I mean, you look at Ford with their massive recalls. They have the most recalls of any manufacturer. The CEO is saying we're focusing on quality because we have all these issues. But the reason why they have quality is because they're pushing really, really hard, and they're not good at that game like a startup like ModVans can be. So for 2023, what we see is a consolidation of our gains. That's what I'm going to call it. We've made all these gains in R&D. Now let's push that into production, because that's kind of the manufacturing thing, is like, okay, it's great to have concept vehicles or great technology, but it really only counts when we deliver it to paying customers. And that's a huge focus for us. And so now in 2023, we really want to take that time. I would say also, though, and kind of in conjunction with that, I'm going to spend a lot of time raising money. So I have, in all honesty, in 2021, 2022, I probably did not spend enough of my time as a CEO focused on actually raising money. And so we're going to do that now. We're going to really focus on raising money and have that capital that we need to double down on production to get these awesome vehicles into the hands of more and more customers, because that's also coming back to what does it impress investors? We have all this technology. Lots of guys say they have technology, but is it being delivered to customers? Is it actionable in terms of making revenue for that people can see?
And I'll say this to your investors, I'll say it to my investors, right? The day a CEO doesn't think that they need to raise money to grow, right, is the day that person should stop being a CEO, right? And there's one of 3 things that's happening. You're either a CEO who knows you're to raise money, or your CEO who doesn't realize he needs to raise money, or your CEO who's raising money, right? And for me, I know that we are going to continuously raise money in different ways to continue to grow our company. And you look at Tesla as a great example. I mean, I don't know how many years Tesla ran in the black before they ran positive, but it was a long time, right? And I remember my lack of understanding, this is just crazy, my lack of understanding of the investment world back then, in my 20s, like, I was 23, 24, I didn't really even know what a credit card was, right? So, it's fascinating how, you go through these advancements, you go through these evolutions, as human beings. But I remember I used to look at Tesla and I'm like, how can they be successful? I said, how can they still exist? How can they not go bankrupt? How can they not this? They cannot that, right? And obviously, you know, Elon's one of the smartest men in the world, and it's amazing where you combine the tech brain with the business brain, right, and the financial brain, because those all three are different types of unique geniuses. And so, you know, for me, it was enlightening to me to start studying models. And so I started studying all kinds of business modeling, and I studied, you know, REITs and how long they ran before they hit P&L, you know, profit. How many were equity versus cash flow REITs? How many were this versus that? And with businesses, it's very, very similar, right? And you can choose to be a very small business. That is absolutely a choice. And that's something my partners and I sat down and we had deep, long conversations about, just like you and your wife did, right? But the bottom line is, if you make the decision that you're going to be a rapid growth, you're going to be a growth based company, then it takes capital and to grow. I'm going to do a couple quick disclosures just because we're kind of diving deep into the money and different kinds of things. One is PJ didn't pay me right to be on our podcast today. There's no financial exchange or thing between our company and ModVans. I look at thousands of investments, right? And I've been able to build, you know, multiple, you know, 7 figures and then 8 figures and then a 9 figure and then a multiple 9 figure, right, empire through investing. And so I look at these companies, I look at these businesses every day, nonstop. And so when I met PJ and his team, it wasn't about, you know, what can I get from PJ and his team? It was about, hey, they have an amazing culture. They have a kick-ass product. Let me get deeper. Let me understand who they are. And then I wanted to share that with you as our investors. The same thing with PJ, right? I'm not compensating him or anything like that. There's times in life where you hit, you know, some synergy or some, what I call, you know, magic relationships, right? And you see things that are worthwhile. And I'm looking at, you know, I was one of the keynote speakers at crowdfunding week, where everybody comes to learn about, you know, crowdfunding companies and industries and those kind of things. And so as we dove deep, I found that ModVans was a company that, like, hey, I'm going to tell people about them. I'm going to give them exposure. As a CEO, you're trying to raise capital. It is a hard fought journey. And if I can make that a little bit easier with exposure to our tribe, that's awesome. Neither one of us are giving any financial advice here. Neither one of us are lawyers. We're not CPAs, right? So, you know, consult your professionals if you need to consult your professionals for stuff. And so as we discuss this, but PJ and I are talking about our stuff from our knowledge, from our experience, from our background of running companies, of running businesses, of running successful companies, of running successful businesses. And so as we share today, you know, I think for you guys, taking some notes on some of the detailed decision-making things we are, and that way, as you go and look at other companies and you're looking at other versions of investments, you can start to create some comparisons, because only when you've looked at 1,000 companies or 100 companies that you can start to pick ones that are different, ones that separate. And your culture is not something, you know, you probably talk about as much, right, PJ, when it comes to your investors and those kind of things. But I think it's one of your great assets. When I met your team and your people and their passion for your product and those kind of things, I was very excited about who they are. So maybe just kind of touch on that a little bit, because I think it's an asset that you can't put a financial number on. It's not a piece of technology. It's not a sale. But the DNA of a company, I think, is sometimes even more important than some of the other aspects.
Yeah, that's an interesting question, because if you look at what, you know, we talked a lot about Elon Musk, and he's known as a very tough boss. And just look at what he did to Twitter. He came in and he fired a lot of people. There's a lot of people that don't have jobs now. And so, you know, what's going on there, and, you know, how does that relate to his previous success, and what can we learn from that? You know, because I'm like you, I'm like watching that and like, what can we do different? You know, one of the things that I've come out of, you know, this long history of working for various size companies. I told you earlier, I don't really like to work for companies that get bigger than 200 employees. And, you know, introspecting on that is like, what really happens there? And it's kind of like, you know, what I understand about what we're doing anyway. And I know it's the same for you. I know the reason you're being successful is because you're obsessed with researching all the time. I mean, you told me earlier, you know, you're just, and my son's the same way. He can't help it. He's always on, you know, all the LoopNet, Zillow, every different media, just looking for that next deal. And so I look for the people that are that way about technology and, you know, vans and what we're doing. I look for those people who are going to have that passion. And so, you know, we do a couple things. One is when we put an ad out there on, you know, to look for employees. If you look at our ad, it's actually, I want to say it's scary. And I'm going to go back. Like, I don't know if you're following the news, but Elon Musk was saying, I want you to say that you're hardcore if you're going to stay at Twitter, and if you're not, if you don't send me an email saying you're hardcore, you've automatically resigned, right?
So I literally am going to have a conversation with our marketing team, right, in the next week, and one of the conversations is, if you don't want to be elite, if you don't want to be world class, if you don't want to be a part of
hardcore,
if you don't want to be hardcore, right, a part of the marketing team that every Fortune 500, every Fortune 100 wants to come and hire you because you're a part of this marketing team. They want to pay you millions of dollars to do what you do because you're a part of this marketing team. If that's not what you want to be, right, then don't be here. And that's one of the conversations, because we have an elite marketing team here. We have such incredibly effing talented people here, right? But I think there's levels beyond where we're at, right? Good is not good enough. And I say that all the time. And when you're talking hardcore, it's not about being good, it's about being great. And there's a big difference between good enough and great when it comes to the message we put out into the world for me. So I'm with you there, man. And
So anyway, it's kind of a tough thing, but when we put out our job listings, if you were to read our job listing, it is scary. It scares away people because we tell them in the listing, like, hey, you're going to come here. You're not going to make a big salary. You're not even going to be at market, and you're going to work your ass off, because and if you don't, you're going to feel weird because everybody else around you is working their asses off. And, I put that into words, I'm very loosely paraphrasing here, but, and the people who are willing to still apply, then, you kind of, that they read that, and, because they have to, there's like things buried in the job listing that if they don't do that, they just get cut automatically. So we know they got to the bottom of the job listing, and they made it through that gauntlet. And when they come in, we kind of continue that conversation. So we look for people who are passionate, basically, who are passionate.
I'd say
and willing
passionate,
to work hard.
maybe even more than hardcore. I mean, the thing I saw with your people, right, that there wasn't like some angry troll, right, building vans, right? These are, enthusiasts, right? And they're excited and they were passionate about the company they worked for. And that's where our teams vibed very well when they met, at the conference. So, I think this was great lessons for people today. I appreciate you being on. We did a great job. I would like to say, I know people can go on your website and see vans and different things, but if you take 25 seconds, 30 seconds, right, and give people a quick look inside your van. Guys, we're going to post links about van mods in the chat, the descriptions, just to make sure you have easy access to go check them out. Hey, invest some capital with them. I think a $250 barrier to entry is awesome. Do more than that, right? Try and make, PJ's life easier so he can focus on growing the business and the profit margins that they need to do. But check out, I'll let him show the van, and I will say goodnight to everybody, and we'll wrap it up with you showing the van, brother.
Okay. Yeah. So, like I said, I do I do most of my podcasting and investor calls all inside a van because it's a nice place. But, just to show you my setup here, let's see if you can see this. This is my little table here. I got a super nice chair that I'm sitting in. So this is my home office. Got the ModVans logo here, but I got armrests. I got a recline. It's super comfy. And then up here is the bed that would. The panel comes out. This is a 6.5 foot by 4 bed. We work really hard on the comfort here. And then the funny thing is, this is our original model. This is the low roof. A little hard to see here, but I got a fridge under here. I don't know if you can see that a little bit. There we go.
I'm making you do an on-site video on a laptop.
Toilet. Yeah, we got the window shades. We got the kitchen here. Yeah. So, I just got to look at the screen. And then, our little dinette set up here. But anyway, the kind of funny part about this vehicle is this is actually my daily driver. So I'm still, here we are. I'm actually 7 years into it, 5 years into ModVans, 2 years before that I built my original van. And I'm basically driving, this is the third one. So we had my original prototype that I built for myself. It wasn't a prototype. I just built it for myself. We sold that, and then we built a 4x4 demo to take to the show where we won an award, and we sold that, and then now this is the third one. But this whole time I've had a very similar vehicle. Of course, it gets upgraded. The seats, like I said, these super comfortable seats. These are kind of new with the modular features, and control panels have been upgraded several times over the generation. And now the new X series, they don't have a control panel. They just have an app that we give you a tablet, but you know what? You can use your phone or you can use your iPad. as well to control everything. So that's just a very quick demo of the van. They all come with up to 7 seats, so they're SUV replacement, and they all come with 2 beds, and then everything's modular. So all these seats you saw, all the cabinets, even the kitchen cabinet, they can all be taken out so that you can do multiple things with your vehicles.
Well, it's a good thing that, you're married to your co-founder. And so, your bed, your sheets weren't ruffled, so you didn't have to sleep in the van last night. So, but
yeah, that's right. Yeah.
I put you on the spot
so
there.
The deal with that, yeah, that kind of ties in with the working hard. Cause when I started ModVans, Lori and I have been through this before. We've been through the entrepreneurial journeyship multiple times together. And she and I both kind of knew, like, okay, if this thing's going to take off, this is going to be what I'm going to be doing 14 hours a day for a long time. And we both I offered, and she accepted, and we knew this was a kind of something that could, of course, it's a struggle sometimes because, we both have very strong personalities, and we complement each other rather than everything being the same. We're yin and yang. And but I think that's great for our shareholders, actually, because they get that perspective. I don't love it when it happens, but I love the result of it when I have some great idea, and we're going to do the seats this way, we're going to do the cabinets this way, and we present it to Lori, and she's like, no, you can't do that, that's terrible. And at first you're like heartbroken, but then later you're like, oh, you know what, she just saved us from building the wrong thing, from spending a lot of time and energy on something that is not going to do well out in the marketplace.
Well, great support, inside the home is just as important to entrepreneurial success as anything else is. So my wife's been involved from day one. You go all the way back to 2007, 2008. My business partner Amy came into business with me in 2009. We started working together for the first time, and between Amy and Vanessa, my wife and my business partner, I'm really lucky, and it means a lot when you have believers right in your home. I know as many men out there, who want that kind of support that are out there, and as women who are entrepreneurs and growing, they want that support too. And it's huge when you get it. But all right, brother, let's wrap up, and I appreciate you, man.
All right. Yeah. Thank you. Yeah.
All right. Check out the links in the description, everybody. Talk to you soon, PJ.